Got a listener question for you, Roger. I'm going to talk to you about this one. Tony says, I just left my job a few months ago after the company restructured and I was offered an early retirement package. I wasn't fully ready to stop working, but it just made sense. I've been toying with the idea of going back to work. I like the routine and sense of purpose, but I've also been enjoying the flexibility of retired life. A buddy mentioned I should go to work for myself and start a business, but I'm wondering what your thoughts are in starting a business later in life. So you go from certified exit planning advisor to certified reentry planning advisor?
I guess maybe. I think I'd first ask him how good of a buddy is this? All joking aside, I think before Tony starts a business, he should ask himself a couple of really key questions. Am I starting it because I'm passionate about it? Or is this just a job in disguise, which it could be? Then also, can you afford to actually start a business without putting your investment portfolio at risk? I think that's actually one of the very big challenges. And I think you should break this down in a couple of ways.
Yeah.
First, you have to determine, Tony, do you need to work again?
Do you need to?
Do you need to?
Yeah.
I mean, you left early. Your friend's telling you to start a business, but do you have to start a business? Because maybe Tony's just missing the structure, the camaraderie, some of the other things associated with going to work.
Right.
And I just had an individual I worked with recently listen to this radio show, exactly the same question, except he wasn't going to start a business. It was, do I need to go back to work?
Okay.
So he may go back to work for other reasons. I think the second thing about starting the business, there's some statistics Tony should know and understand. 22% of all businesses fail in the first year. And that's why I mentioned earlier, we should ask ourselves the question, can we do this without putting our retirement at risk?
Right.
2, 50% fail within 5 years. There's a 50% chance you will be out of business in 5 years. The top reason businesses fail is cash flow. So once again, do we have enough money to start a business?
Yeah. And again, I like the way you say it, and not risk what you've put together for retirement, because if you're staking your entire, literally that's you going to Vegas at that point. Okay, maybe a little bit better than Vegas because you got something in charge of it, but you're putting it all in the middle of the table.
Vegas might be better.
Okay.
50-50. If you go to Vegas, it's not a 50-50 payout. Vegas, right? There's every machine has odds that it pays out.
Yeah.
Doesn't pay out 50 cents on the dollar all the time. Yes, you could win, you could lose.
Yeah.
But the statistics regarding business startups is pretty clear. The success rate is not great. And then above and beyond that, are you enjoying what you're doing?
Yeah.
I think this brings me back to the question or example I have. My wife and I always joke, if I ever decided to retire from this and take another job, it would be at Shields in the fishing department.
Yeah.
But the challenge is, and I thought to myself about this, all of a sudden when I try to turn the hobby into a business, is the hobby fun anymore?
Yeah.
And I did a event for the St. Croix rep. This is about 6 years ago. He called me up and said, Roger, can you go work this event at Shields? Outdoor. It was Saturday afternoon, 72 degrees, and the fish are biting. And the whole time I'm there, I'm like, why am I here helping someone sell fishing rods when I could be out fishing?
Exactly.
So, Tony, whatever you do, the key takeaways: 1, determine whether you need to start this business. 2, determine whether you really want to own a business. And 3, can you financially sustain a business without putting the rest of your retirement at peril?
That's great. And I tell you what, this is one of the neat things about getting to work with the folks at Premier Investments and Wealth Management that you'll get to understand is that it's more than just about the dollars and cents and the cash and the growing your money. It's about the psychology investing and the emotions that are involved in it. They work with you as their client. This is why Premier Investments and Wealth Management was named Forbes 2025 Best in State Wealth Management Teams. One of the reasons why, at least. PremierIWM.com. Call 800-383-6590.
Securities and advisory services offered through LPL Financial, a registered investment advisor, member FINRA SIPC. The opinions voiced in this show are for general information purposes only. and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial or tax advisor prior to investing. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is not a guarantee of future results. All indices are unmanaged and cannot be invested into directly. There is no assurance that the techniques and strategies discussed are suitable for all investors or will yield positive outcomes. The purchase of certain securities may be required to affect some of the strategies. Investing involves risks, including possible loss of principal. There is no guarantee that a diversified portfolio will enhance overall returns or outperform a non-diversified portfolio. Diversification does not protect against market risk. Rebalancing a portfolio may cause investors to incur tax liabilities and/or transaction costs, and does not assure a profit or protect against loss. Premier Investments in Wealth Management and LPL Financial do not provide specific, individualized tax or legal advice. We suggest that you discuss your specific situation with a qualified tax or legal advisor. Forbes' Best in State Wealth Management Team's ranking was developed by Shook Research and is based on in-person, virtual, and telephone due diligence meetings, and a ranking algorithm that includes a measure of each team's best practices, client retention, industry experience, review of compliance records, firm nominations, and quantitative criteria, including assets under management and revenue generated for their firms. Investment performance is not a criterion because client objectives and risk tolerances vary, and advisors rarely have audited performance reports. Shook's research and rankings provide opinions intended to help investors choose the right financial advisor and team, and are not indicative of future performance or representative of any one client's experience. Past performance is not an indication of future results. Neither Forbes nor Shook Research receive compensation in exchange for placement on the ranking. For more information, please see www.shookresearch.com. Shook is a registered trademark of Shook Research, LLC.